Most traders get stuck using just one time frame, but smart money doesn't trade that way. In this video, I'm revealing a powerful 2 time frame trick that will completely change how you read market structure. Stay until the end because I'll show you exactly how to combine them for the best trade setups. Today we're going to walk through gold. Many of you have been asking for gold, so we're going to walk through understanding the applying of this smart money structure technique, and then I'm going to combine 2 time frames so you can see how you can look to take some trades, and we'll go through some trade setups, so keep watching so you don't miss any of that in this video. Now, of course, if you want to take your trading, your structures to higher levels and start capturing trades like you can see these members inside the pro community, do check out the 90-day profit trading system, and you'll find there's a link below in the description of this video. So we're going to start by going some top-down analysis. We'll do a current movement we have now on price from the monthly down to the 15 minutes, showing you how to mark the chart up. Then later in the video, we'll go through some actual 2 time frames together with the entries, so you can see how you combine 2 time frames with this strategy so you can start taking trades with more confidence in your own trading. So we'll start off on a monthly time frame. Now I'm going to do this quite quickly because hopefully you understood the technique. I've been through some previous videos, so we'll just go through this very quickly and mark it up. So currently we don't have a valid high on our monthly, we're just moving higher. So we look for our previous break of structure. We have a valid low here and we have a valid high here. So at this point, this is a valid high. So this is going to be my last break of structure I can mark off on a monthly time frame. So this would be my break of structure to the upside. My valid low from the breakout is this low here. This is my monthly low. Okay, so if you're using these structures with the way you're marking up the smart money structures, this is your breakout. This is the current low. As price moves higher, I'm going to have an area of potential demand down here that I have on a monthly time frame. But since then we can see a strong run to the upside. We're going to find a nice trending pattern on a daily time frame probably. So that's my monthly. We go down to a weekly. You'll see how quickly we can do this. So the market pushes up here from this low. We create this high. We have another break of structure here to the upside. We continue up and we have this pullback, and then we have another break of structure just recently. So we now have a new break of structure to the upside. We continue to be bullish with the weekly structure. We have a valid low we can mark here in the market. So this is my weekly low. And we did have, okay, let me go closer into the structure. This is how you can understand how price moves. We did have a valid high created here, but now that has created a new valid break of structure. So we went from this larger range to this smaller range, and now we can actually move this low here in the market. Again, that would give me this current area of demand price could pull back into. So there is my current move on the weekly. You can see the strong bullish move on this trend on the weekly, understanding that we're on that strong move up on the monthly. So we're bullish on the monthly, bullish on the weekly. We go to the daily time frame, and we don't really need this level because we only need the last levels in the market. We don't have a valid high on the weekly. This is our previous breakout. This is our current weekly low. So on a daily time frame now, we can see that our valid break of structure. So we had this high formation. Okay, so we came up to this area. This created a valid high here. We then broke structure to the upside on a daily. This created a valid low. We then broke bearish, okay, on this move to downside on the daily. Let me just mark it off so you can see where we have that shift. So we broke down bearish, and let's mark it off. And then since then, this became a valid high. We then had a new break. So we'll just put this above here for the moment. Our weekly and daily is at the same area at the moment. So we've got the same break of structure. This becomes my valid low on the breakout for a daily low. Now we just closed down, which means I now have a valid high on the daily. So if you're using gold, understanding that this is a daily and a weekly break of structure, the move up, this is our weekly low, this is our current move up on a daily. We have, this is a nice area of demand on a daily time frame. We can see price pulling back too, but we could just pull back. We mark it off. I like to see price pulling back in below the 50%. We also have an area of imbalance here and a potential area of imbalance here towards the lower end of that imbalance, price could pull back too. But this is more to teach you how we look at our structures and we mark them up. So this is my current move on the daily. We're bullish on the daily, bullish on the weekly, and bullish on the monthly. Now we can drop down to a 4-hour time frame. So looking at the 4-hour time frame, this is our daily low and high. And just mark it off that high. On a 4-hour, we have a push up. We don't have a close down until here. So that made this as a valid high on the 4-hour. We then have a valid break of structure to the upside. And then we have this valid break to the upside. This became a low. You can see how quickly we can just look at the chart and we can mark this out. This is a low, and then we pushed up. This creates a valid high on the 4-hour time frame. Then we have this low basically broken to downside. So now we have a valid break to downside, and this creates a valid high on the break to downside. So this is the first time we've seen price shifting to the downside. So now we have a bearish bias on a 4-hour time frame. And we've also created a valid low, which we can mark off here on our 4-hour low. This is how we mark this out. Now you may be unsure how we're doing this. Don't worry. There's a video coming at the end of this video, which will teach you step by step how we mark all this up. But when we see price breaking down, we're seeing that pullback phase. We do have a bearish bias. We have an area of supply above, and we also have an area of liquidity sitting above this high, which could be run into that area of supply. But we need to remember as well that we're very bullish on the daily, very bullish on the weekly, but the daily has created a valid high, which indicates to me we could start to see that shift bearish. So you could start to see price want to pull back against that daily move, against that weekly move, and then eventually look for price to want to continue higher if we're going to continue higher. So that is the multiple time frame, okay, at the moment down to the 4-hour time frame. If we go to a 30-minute from this point, where we see the structure break on a 4-hour, we've got this as our 4-hour high. We'll remove this area of supply. We don't need that. When we see price, okay, dropping down from this high, we had a valid low here. Let's just say this is a break to downside. We pull down, we make a valid low, we pull back up. So our trading range is from this high to this low. This then becomes a new break of structure. This became a valid high. Let me just mark it out here, and a valid low down here on this time frame on the 30-minute. So again, we then have an area of supply here, okay, where we do have on a 4-hour time frame this candlestick, okay, on this point, but we do have liquidity sitting above that high, which could be run above into this previous high up here. But based on this time frame, this is our current area that price could come back into and then continue down with that 4-hour time frame. So that's looking at the multiple time frames, so the top-down analysis. That's how quickly I'd mark my charts up using this type of structure. So we've got that bearish bias at the moment on the 30-minute, 15-minute. On a 4-hour time frame, we've shifted bearish, pulling back. Okay, we've created that valid high on the 4-hour and the low. When we look at a daily time frame, okay, we've created that bullish move up. We've now created a valid high. We could start to see a potential pullback. Okay, it's also a run on the weekly. We move to the weekly and see that current run on the weekly. And obviously, we look on a monthly, we can see that bullish run on a monthly time frame. So that's how we look at marking up a top-down analysis. Now, what about the use of the 2 time frames and how it can help you to find entries? Let's now just remove everything off the chart. And again, if you want to see how I've marked this up, go back to the beginning of this video, watch it all the way to this point again. It will show you how we do that multiple time frame. So let's go to a daily time frame. We're going to look at a potential 30-minute entry today, potentially. And let's just start. We have a nice run. Let's say here, we have a nice bullish run to the upside here. Now, I know this is in hindsight and we can see it's a bullish run, but the process will be the same way we're doing it as we continue forward with price. But let's just mark off, let's say from here somewhere. And what we're going to look for, we're going to run price from here. Let's just run forward and we get a breakout. So straight away, we can understand this is a valid break of structure. Okay, on a daily time frame. We then create a valid daily high here. And this is how we'll just track price. We have a valid low on the close down is going to be down here because this is our, where do we have a close down? We have a close down here. So this in fact would be a valid low here. So that's our valid low on the daily time frame. So understanding price, we're looking for a pullback. Whenever we're looking for pullback, we're looking below the 50%. So at the moment, this would be a valid area of demand. So are we looking for price to come down to this area to look for potential buy trade? Let's go forward and see if we pull back. Okay, so quickly we've shifted bullish again. We never pull back to area. So if we don't pull back below that 50%, I'm just not interested. So now we have a new break of structure. We'll leave that one there. So again, we've shifted bullish. And we'll put that as a new break of structure. Our new low is going to be created here. And that's created because we see this candle closing below the previous candle's low. And again, the video later will go through more depth how we use this. So now we go forward a candle by candle basis. We're looking for a close down of previous candle's low. Okay, so this is closed below this previous candle low. That means this becomes a new high. And again, we'll do the same thing. We're looking for price to pull back below the 50% area. Okay, so for me on this one, I would have an area of demand here, but I also have an area of imbalance sitting above. So either of these areas, I'm willing to look to take any buy trades from, and I'll be looking to target this previous high. Let's go forward. Actually, let's go down to a 4-hour time frame. Okay, so we can see where price is pulling back on a 4-hour time frame. Let's look for a 4-hour structure now. This is our daily low. Now let's look at our 4 hours. So from this high, let's look back. Do we don't have any close down? No close down. That doesn't close down. I'm looking for a candle to close below. So this is the first candle that closes below a previous candle's low. That means, okay, this becomes a valid 4-hour low, and this becomes a valid 4-hour high. So exactly the same. And this would be a break of structure on a 4-hour as well. So based on that, we have a 4-hour and a daily in the same place. So I'm still looking for price to pull back to this area. That's because this is my daily area of imbalance. Let's go forward. Candle by candle. Let's go candle by candle. Let's go a bit quicker as we're pushing up. So we could continue higher, and again, we'll have no trade. We won't have anything to trade. Let's see what happens. Looks like we're going to go higher. We're moving sideways. Okay, we'll need to drag this across. And I'll need to go back to the daily just to find out, okay, where that was. You can see we've actually pulled back into this at the moment. So either into this or this, we can start looking for any trades. We know now that price is going to drop in at some point. So we drop in. So now we just quickly look at where we sit. We're below 50%. That means I can start looking for a trade. How do we do that? Well, using multiple time frames, 2 time frames. On the 4 hour, let's change this to a 4-hour break of structure because it'll make more sense because it's in the same place as the daily. This is our daily. It's also going to be a 4-hour high. So we'll leave that as 4-hour high. We'll leave this as a daily low. We know it's a daily and a 4-hour low. We could push deeper into the demand, which is even better, a full fill, but we've touched the 50% area of that imbalance. Now, if you want to learn in much more detail how we trade imbalances and use of supply and demand, do check out that 90-day profit trading system. It goes through step by step exactly how we do this, and you can be part of that 90-day profit trading system community as well. So you can check it out. There's a link in the description of this video. If we now go down to a 30-minute, we'll now understand how we read 2 time frames. Let's zoom out. This is our current 4-hour swing move to the upside. This is our pullback on the 4-hour. We've also got the pullback phase we can see here on this move on the 30-minute. We just had a big push to the downside. We do nothing anyway until we get to our ideal entry area. Now we can start looking at price. We have a break of structure here to downside. We have a high here we can mark off, and we have a low here in the market. So that's my current trading range on a 30-minute. So what can happen here? We can have 3 different things can happen. One, we could see price continue lower, breaking structure, leaving a new high, and then we can look for a shift back above that high for a reversal. And that's your reversal entry area back into new area of demand. Or we could just simply see price reversing this pullback phase, and then we see a reversal and continuation like that. And finally, there's one other way we could see just a wick through this low, sweeping the low, and then we run for the high. And that's something we see very often in areas of imbalances in supply and demand. So at the moment we have, yes, we have some liquidity sitting below this low. Because we have a low created, price will want to run that liquidity. Whether it's a wick through or close through, at some point we may or we should run this low before we really run higher. Let's go forward. Let's go forward a few candles a bit quicker. Let's see what happens. Are we pull back? We're going back towards the low. No. Okay, so we've come back very close to this low. So what's that now creating? It's building more liquidity below this low. Every time we come close to this low, but we fail to break it, it builds up more liquidity from buyers coming into this market. This is really more about structure now, but you're learning more here in this video. So if you're still here watching right now, do leave a comment below and let me know with one word, I'm watching liquidity. Nobody's going to know what it's about, but you do because you've got to this point in the video. Let's continue forward. Let's go step by step actually. Let's go, we're coming back again. And again, we've just wicked to that level again. What is that going to do is creating equal lows here, more liquidity below those lows. We now have a ton of liquidity sitting below this area. It's most likely going to have to get run, either run and close the downside or just a wick through and a reversal back for the high. That's how we look for these potential setups. Let's just see, keep going forward with a candle. Okay, so we've got some sideways price action. I'm not doing anything at the moment until either I see a close down, a wick through to downside, or a reversal of this high. That's all I'm waiting for. So at the moment, price is pushing back up. Okay, candle by candle. This is the best way to understand what's happening. Again, look, we've got even this low here in the market was created on the way out. What's that going to create? More liquidity. And we've also got this build up of this trend line here to the upside. Let me just show you that again. I'll draw this out. Got this trend line here, okay, building up more liquidity. So even this is showing me now that we're likely to push down here to run all this liquidity. Let's just go forward now and see what actually happens. So I have no clue what's going to happen here. I haven't looked at this yet. Okay, so we've run liquidity. Oh, okay, so we have now on this candle, nice big wick to downside. That shows me that candle, what we was looking for. What I was looking for, a run of liquidity in this trend line, a run of these lows and this low over here. All this liquidity has now been taken by this wick to downside. And what I like to see with this as well, we have a break to the upside, internal break to the upside. This becomes my valid low in the market. So what I've now really got is with that breakout is an area of potential demand here. So again, let's go forward now and see what we do on the next candle. Okay, so we created an area of imbalance. Like we saw in the daily time frame, we created an area of imbalance. So we have this imbalance and this area of potential demand. Now, when we have them so close together, and I'm looking really for price to continue higher now after this run, because I want to see this taking all this liquidity, strong bullish move out. I'm going to look for a buy now. But I'm going to look for a buy just at, okay, the low or the high of that area. Okay, so just below this candle into, so we're expecting price to run below that candle into this area of imbalance. So there's the imbalance. We have the entry there. We could look for 50% of the imbalance, okay, or the high. As we've got very small movement there, that's fine for an entry. So I'll just bring this across to here. My first target is going to be this high. Why? Because we're still bearish. But this sweep can very often show me this bullish move that we're at least going to sweep and run that high. We could still run low again from there for this demand. But understanding this build up of liquidity, understanding multiple time frames, we are looking for a bullish run towards this high yet. So what I'm going to expect is looking for this nearly 6R to this high. And then I look to hold for this high, which would be what? Over 11R. So we'll lock this off. And then we'll just see where price goes. Go forward another candle. Okay, so we've been wicked in. It did get to the 50%, so we could have gone for a 50% entry there. Okay, we didn't have to go for the high of the zone. You can see very often they will pull back to that 50%. And let's just go forward again. So yeah, we're definitely heading high. Let's go forward. So right now, I can't do nothing now until we run through this high. So let's just see if we can run for that high or not. So we've just tagged again into that area. And this is using multiple time frames. So let's see what happens. Price is moving sideways and we've run through. So now we'd be risk-free on this trade. We've taken that just under 6R off the trade. I've been moved to break even and I'll be letting it run for the 4-hour high. That's how we use the 2 time frame approach. So now what we have is a break of structure here. So we can take this off. Let's mark this off as a new break of structure on this time frame. So we've broken to the upside. We can also mark off a new low. In fact, let's use this low down here. This is a new low in the market because where we see this candle closing down, that creates this low. So we just need a valid high to be created. We're looking for that close down. Okay, not yet, not yet. We could continue up first. Okay, so that closes below that candle's low. That creates a valid high. Let me just zoom in. Okay, so this candle closed down. So that creates that as a high. That's how we do this. Now, again, we've got a smaller structure, a smaller range to trade from. We can look again for where is that 50% lies. So it's here. Do we have anything? We don't have anything there. So let's drop down to 15 minutes and see if there's anything lower. Okay, so we do have an area here. So we have a nice looking area of demand. So I'd look for an entry off this demand all day long because it's a good solid entry. Why? Because let me see if I can get rid of this. Now we don't need this on here. Okay, so get rid of that. We have what we class as that liquidity sitting here. So we have these equal lows. That creates for me some liquidity in the market. So I'm expecting price to at least want to run this low into the imbalance above. And again, we could see price just running to the imbalance and then shooting away. But let's just set this one up as a buy. Let's go off this area. Stop just below the low. Again, where is our low? Our low sits here. And then we would target the high. I'm not going to look for anything more than that because we're already in this long-term trade. This is for trades as we continue to move higher with the structure. So we're bullish on that structure. That would give me, if we get to here, just under 5R again. So let's just bring this across a bit and let's see if we get any entry. We might not. We might just see a continuation. Let's just go forward with price. Okay, we did get a pullback. Let's see if we get triggered. We did. We got just triggered there. And again, look, just while we're on the subject of liquidity, let me just draw this out. We created some equal lows, which basically leaves an area of liquidity sitting below. So price had to take that liquidity into the area of demand. And obviously we filled that area here, okay, of imbalance. Fully filled it. You can see how that works. And again, you can learn all of this inside that 90-day profit training system. So if we now look for this to run for this high, that's what I'd be looking for. We could still have a losing trade to see what happens. Okay, a strong push away. Let's see if we hit target, and we do. We hit target. So that one is a winning trade. Let's leave that one locked to see what's happening. So again, now we have a new break of structure from this high. We've broken out. Let's change that to a line. Then we have a new high created here. And you see price pulling back. And you can see actually we're on the wrong time frame. Let's go back to the 30-minute. Okay, so we have a new high created. And this would be my new low in the market. So we have this one. Let's remove that one. So you can see now that we've got basically, let's get rid of this line here. Oh, and another one. Now we have again an area of demand. So we could look for another entry down here. And obviously we have an imbalance here in the market. Now, again, we can look for where price will pull back to. That we have another below 50%, anything in this area. But again, we're just going to go for another buy entry. Let's keep going with this trend and see if we can keep capturing these trades. So this time a bit smaller, 3R. Let's just see what happens. Let's just run this and you can see how this works. Okay, so okay, we got triggered in, but looks like we could run lower and take us out for a stop. Let's see what happens. No, pushing up again. And okay, so this was a losing trade. So you've just seen how, you can have losing trades with this strategy. There is no strategy that's going to give you 100% winning. But at the moment, you're in this trade for 11R to run for this high. This one hit full target, nearly a 5R. This one would have been a losing trade. Okay, so if you're risking 1 or 2%, that's what you've just lost. That one didn't work out. Now what we had here was a break of structure to downside, and we can mark this out as a new high. This becomes a new low here in the market, and let's mark this off. This would be a break of structure here to downside. Let's just see what happens if we shift back bullish or not. Okay, so now we have a new break of structure to the upside again. That's how we follow our structure. Let's just go forward, and we're looking for that close down. See, and we get a close down. So now we have a new high. Again, we do the same thing. We have a new area of demand. Yes, we could just come into this imbalance and head up. Let's just continue with what we've been doing. Let's go for another potential buy here. And this is just over 2R. I potentially might not take this. I'd rather see a 3R trade to see what happens. Okay, so we never got to an entry. We actually held off this area. So no trade there. We then broke through again. Okay, we can see we continue to be bullish at this point. A nice breakout. And we have a new zone we can mark off here. Just mark this off. And this would be our low in the market. Because where we see the close down, break of structure, let's see if we get a valid high created. There's a valid high. Again, we're continuing to be buying because we're going with that 4-hour trend, understanding the multiple time frame here, the 2 time frames. Look, there's our swing pullback looking to run for that 4-hour high. This is how we use our multiple time frames. Let's just go for another entry. Let's have it here somewhere. Now this one I would not take based on this information because look, we have only got under 2R. I want to see really at least a 2, even a 3 to those previous highs. I would hold this though for this high now because we're getting close. Let's just see if we get triggered or not. As we're still bullish, we could pull back, we may not. Looks like we're breaking higher. So there was no trade anyway entered on that one. Now, as price continues to move up, okay, we have a break of structure. This is my last valid low. This becomes our break of structure, and we're looking for new valid high. So let's wait for a valid high. We go forward a few candles. Let's see, we continue it up. Okay, we now get a valid high here. So again, let's look for where we could look for buy. Well, we have an area down here, but this is just so far down on this bullish trend. I don't think we've come this far. Now, if we look at where our 50% area sits, where does that sit on this move? Okay, so we do have an area of imbalance here, which means we have a nice area of demand on the move up here. So it's more of a rally-based rally area of demand. So this is an area I would be willing to take a buy from, another set and forget entry style. So I take a buy again from this area. The stop would be below the low. Just mark this off. And again, I would run for the daily 4-hour high here because we've not got much space. We've been going up nicely. We can see that we've got this trade still on. So let's just unlock that. This trade potentially looking for that 11R. This one was a winning trade. We had a losing trade. A few times we haven't been triggered. Let's just see if we get any trade here. Let's go forward. Okay, so we've actually spiked for the high. We didn't close it. So that means any pullbacks are still valid. But we could now run lower and take this area out. And we could run even for this area of demand. Let's see what happens. We've held at the moment. Went deep in. And we've actually pushed back up for this high. Now we just closed through that high. So based on that information, that's a new break of structure. We did create a new high here as well. So let me just mark this off. This is a new break of structure. And let's use this low. Our valid low is going to be right there. So this is our valid low. Let's see what happens from this point. Okay, so we run up and we took the high. So this trade has worked out as well. Okay, the larger trade also worked out. We took this high here. So we did very well here on these trades. We got nearly a 3R, we got nearly a 5R, and we've got 11R. And this one was obviously a -2. Hey traders, we'll get back to the video in a second. But if you're tired of second guessing trades and struggling for consistency, listen up. Danny was just like you. stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This system gives you everything you need to trade profitably: step-by-step strategy, personal support, and lifetime community access. Spots are limited, and we only take a handful of traders each time enrollment opens. If you're serious about finally seeing results, click the link in the description now before it's too late. Now back to the video. And if you want to learn this in step by step, exactly how we use this market structure, check out this video coming up next.